It's begun. Imminent banking crisis and the collapse of shadow banking. Happy Sunday and welcome back to Real Estate Mindset. Just got done filming DNN. Now, I wasn't even going to do a video today, but our community guardian angel, Mitch Vexler, sent me an email just now, literally about 30 minutes ago, with a workup titled The Insidiousness of the Shadow Banking System. And so, first of all, Mitch, good evening, sir. How are you this evening?
Yeah, it's another day of the juggle. It's all good.
You know, I got to tell you, man, this is just the way that you broke down shadow banking and the way that, you kind of just tied it all in, I thought was absolutely beautiful. I think that the viewers are in for something great tonight as we explain to them what's shadow banking, how is it going to impact them? What's the big deal? Why are we making this video? So, Mitch, before I begin, anything you want to say?
Yes, this concept of the insidiousness of the shadow banks is in direct relation to what we had done with Jeremy Bagot when he had mentioned FHA, HUD, Fannie Mae, Freddie Mac. They're all connected at the hip. They're all a creation of something that's extremely insidious under the hood and very nefarious. And that's what we're going to discuss right now.
Yeah, and one more thing, Mitch. Why are you working so late on a Sunday, man? I mean, you gotta just real quick to the viewers. This man is always working. He's always trying to figure out how can we break down such complex issues and bring it to your home so that each and every one of us can understand. So that, first of all, step one, awareness. Step two, uniting. Sticking together, one thing, signing the petition, but you have to be aware. Now, before I really let you sing, Mitch, and I know you want to right now, I know you're ready to sing, let me kind of just cue up the viewers because I only want to show the viewers what's going on with CRE and how CRE, or commercial real estate, is a lot of that is held by these shadow banks and non-depository banks. And I want to talk about CRE first because that seems to be the biggest area of meltdown, the biggest crisis happening behind the scenes right now, commercial real estate. And this says right here, this is very interesting data. It should not be surprising that the total value of delinquent loans tied to commercial properties such as malls, offices, industrial units was estimated at a whopping $24.3 billion in commercial loans that were in delinquency. Okay, that's more than double the 11.2 billion registered in 2022. Now, according to the data firm MSCI, meanwhile, and this is crazy, Mitch, more than 38 billion of U.S. office buildings are now threatened by defaults, foreclosures, or other forms of distress. I mean, this could be bigger than just the GFC. This is crazy. The highest amount since the fourth quarter of 2012. And the Mortgage Bankers Association's 2023 Commercial Real Estate Multifamily Survey of Loan Maturity Volumes, published mid-February, found that 20%, or 929 billion, of that 4.7 trillion of outstanding commercial mortgages are held by lenders and investors that will mature in 2024. And that's a 28% increase from 2023. In other words, extend and pretend. I just want to read this last bit so that we understand that it's, these shadow banks are at the biggest at risk. Now, this says, many believe the situation should be manageable at current levels for the biggest banks. Wells Fargo, for example, recently confirmed that its CRE loan strains are largely confined to the office sector and that it has set aside enough reserves to absorb charge-offs after large builds. But while CRE accounts for about 11% of the average loan portfolio of the big US banks, that exposure soars, almost doubles to 21.6% for small banks, such that more severe problems could befall smaller and regional US lenders as they face higher risks of write-downs. What is a shadow bank? And I want to tell the viewers, back in 2008, 2009, there was a shadow bank on every single corner that was shutting down. I mean, that's how bad it was, and it felt like it was pretty much overnight. So Mitch, can you just start by telling the viewers, and you broke this down wonderfully, what is a shadow bank?
Before we get into that, I just want to address one thing, because Wells Fargo in itself is kind of involved in the shadow bank world. So that statement you just read from Wells Fargo, remember, this is the same bank that created millions of fraudulent accounts and was called on the carpet by our government for doing so and had to pay huge fines. in my mind, they have zero credibility. Now, with regard to the shadow banking, it's a fairly complex issue, but we've somewhat been involved in it because when you're under construction, people approach you, would you like to borrow this money? We have this money for reinsurance. We have a reinsurance company, so it's reinsurance plus reinsurance, and they all believe that they're all backed by an asset. So they come back and say, well, everybody down the chain has a guarantee of some form. The problem is there isn't a stitch of truth in that. So shadow banks are non-financial intermediaries, and they conduct loans, credit guarantees, liquidity transformations without explicit access to the central bank. They act as a bank, but in reality, they're not a bank, not a big bank, major bank, and they are not regulated in the same way as a major bank. The problem becomes on the shadow banks, they start doing what's called inter-creditor agreements. Basically, they create credit out of thin air with the idea of, in their mind, being a more efficient method of finance. More efficient, you can put in quotations, basically means, yeah, there's no equity, we're just going to create a credit, and we're going to financially engineer human nature. So you have so many layers of complexity going on here, none of which at the tail end of the day is really backed up by the original asset. So what the banks will do is they'll create a loan, but they won't keep it on their own books. They'll sell that loan, and they may cut that loan 1,000 different ways, like cutting a line of cocaine. So in reality, what they're really doing is, how many lines of cocaine can you get out of it? 10 kilos of cocaine. And they keep cutting and cutting and cutting and selling and selling and selling. Well, why are they doing this? The answer is the fees. So if you have somebody who wants to borrow money over here and the bank makes a loan over here, well, the middleman bank is collecting a fee. Now that fee could be a fee, it could be interest payments, whatever it is, that's part of the inter-creditor agreements that's going back and forth between the parties. However, the net result is really kabuki theater.
Okay, well done, man. And, so just to get this straight for the viewers, essentially a shadow bank is kind of like an intermediary, right? It's like the middleman between the investor and the borrower. So it's a middleman. Unfortunately, that middleman, sure gets us into debt. And I wanted to read this. Examples of shadow banks include financing companies, asset-backed commercial paper. Asset-backed commercial paper is ABCP. We have conduits. We have structured investment vehicles. That's SIVs. We have credit hedge funds. We have market mutual funds, securities lenders, limited purpose finance companies, which is LPFCs, and the government-sponsored enterprises, obviously the GSEs. Let me show the viewers this. When I asked Google, what are the top functions of these non-banking financial institutions, it's not to get us into more debt, Mitch, and not to cause a collapse in our financing system. It's supposed to be good for the communities, right? So, here's some of the top functions: investment banks, mortgage lenders. I know a lot about that. I was in mortgage lending, still am. Money market funds, insurance companies, even, Mitch, that's crazy. Insurance companies, hedge funds, private equity funds, peer-to-peer lenders. Mitch, can you go into a little bit more about why these entities were created and around when they were created, these shadow banks?
Well, coincidentally, the Federal Reserve was created between 1913 and 1917. These shadow banking theories, Freddie Mac, Fannie Mae, the government service enterprises that you're talking about, Federal Loan Bank, were all created around the 1930s. So it sounded good in theory. Well, the Federal Reserve was designed in theory to backstop the banks in case there was a bank run. The reality is, and I have a really interesting paragraph I just want to read, but that is about the creation of the Federal Reserve. And when you go into that paragraph, yeah, not a single thing that Federal Reserve was created for has actually occurred. In other words, as I said before, they're reactionary. They can't stop a bank run. So what are they really doing? Well, they really exist to backstop the banks. Fannie Mae, Freddie Mac, HUD, what do they exist for? Well, they're in the fee business in reality, and they are, in fact, a non-structured bank as the major banks are. They're not held accountable as, say, a JP Morgan. So under the hood of all this isn't the billions of dollars that previous articles was referring to. It's in the trillions. And therein lies the problem. You can't see how many trillions of dollars are attached to this, because it's not just those entities that you read on the mortgage lenders, et cetera, et cetera. It's the insurance providers to those lenders. It's the reinsurance providers to all those entities. It's the reinsurance providers. Every layer of this believes there's an asset. The problem is, like I said, they cut the lines of cocaine so many thousands of times. All of those entities combined really equate to one thing, and that's third-party credit risk. When you sign a loan with a bank, how in the hell can you possibly figure out who their third-party credit risk is coming from? And the answer is you can't. And that's why it's called shadow banking. And we have hardcore evidence, not from just our own interaction of all of this, but I told you before, there's a property that we tried to rescue. The equity is going to lose 18.5 million. The shadow bank lender is going to lose, give or take, around 7 million. And what did that shadow bank do? Well, they went to a bigger bank and borrowed the money. So what were they really about? They were the middleman picking up the interest rate in between.
You know, it just becomes clearer and clearer, Mitch, how everything is built on a house of cards and an illusion and really our emotions. Like, I never thought, like, how could the economy be built on emotions? Well, that's exactly what we have going on. And I just wanted to clarify something about shadow banks, essentially getting their credit through a wide range of securitization, such as secured funding techniques like asset-backed commercial paper, that's ABCPs, asset-backed securities, ABSs, right? So asset-backed securities, collateralized debt such as CDOs, and repurchase agreements like repos. So I mean, they're it's just imaginary credit. And Mitch, do you think that there was a point when the shadow banking system was effective? Do you think that it can be saved, Mitch?
No. So the S&P estimated in 2022, which I think is complete nonsense, but nonetheless, let's run with it, that there was $63 trillion in financial assets globally. Those assets are off balance sheet assets. There's simply no way that anybody can figure out what truly is under the hood. And remember, this is 2022. And as I said before, there's what we're looking at in all of these videos in reality is the cumulative compounding effect. And you can refer back to the rule of 72 that the debt doubles every 10 years, depending on the monkeying that's going on from the Federal Reserve. So you end up with these off-balance sheet assets that are incalculable. More than likely, I would probably, if I was forced to guess, you'd be double up what the S&P came up with at 63 trillion. I think the 63 trillion is pretty close to the US number. So when I say unfunded liabilities, one of the prior videos, this is one of those unfunded liabilities, and it's complete nonsense. It's straight up toxic nuclear waste.
Mitch, is it safe to say that these middlemen that probably shouldn't exist in the first place, right? Is it fair to say that those middlemen and shadow banks are actually a result of their bad decisions has actually impacted and changed law?
No, because the law as it currently exists is designed to ignore this shadow banking problem. One of the things that we've mandated, and one of the reasons why I'm not doing construction as we speak, I won't work with another bank that doesn't keep that loan on its books. I will not get involved unless I've got the right in a contract to buy down that loan should the bank decide to sell it. I get first right of refusal or no deal. I don't want to have third-party credit risk when I sign up an agreement. Not interested.
Now, would you say that the Basel III endgame that can has been kicked down the road? I mean, that can is beat up, man. It don't even look like a can no more. It's been kicked down the road so many times. But would you say that Basel III endgame will have any impact on potentially the terminating these shadow banks. A lot of people, Mitch, have said that Basel III is going to end these people, is going to end those, the intermediate, the middleman. Do you think that Basel III is that powerful? And do you think that they will end up enforcing it?
Well, and therein lies the problem. The answer is yes, in theory, it should. If you force a bank to hold its assets, be it a loan on the books, because it's guaranteed by a hard asset, then that's where it should stop, right? And then the governments can see what's going on. The investors in the bank can see what's going on. The people who are borrowing can see what's going on. This third-party credit risk is simply off the charts. This shadow banking should not exist. Frankly, and as I said, the Federal Reserve shouldn't exist. These are all nothing more than machinations designed to steal taxpayer-created wealth. And they've done a fantastic job at it. If Basel III does come in and the government does force it, and remember, there's an awful lot of money at play here. There are big money people who are simply saying, oh, no, we like the system. We want to pick the fees up in the middle. And by the way, how great is this? If we F it up, the government will come in and bail us out. Well, the problem is, if I'm right at 120 trillion on top of the existing debt, okay, yeah, so give or take, we're hovering around 300 trillion. Yeah, no, the federal government isn't going to do that because the money doesn't exist today to pay the current debt load, let alone all this other kabuki theater, nuclear waste. And therein lies the problem.
And Mitch, when I kind of just sit back and ask myself, well, how the heck are we in this situation again with these regional banks? Again, I'm from the GFC time, the Great Financial Crisis. I remember these banks going out of business like crazy, and I see they have even more toxic assets right now ahead of a recession. Mitch, can you explain to the viewers kind of how we got into this situation all over again and kind of pinpoint how shadow banks do not have the same regulations and liabilities as these big banks? In other words, these middlemen have a bigger opportunity to put themselves and us, the taxpayers, at risk. Can you go into that?
I want to read a paragraph from the Federal Reserve Bank of St. Louis. It says, before the Federal Reserve was founded, the nation was plagued with financial crises. At times, these crises led to panics in which people raced to their banks to withdraw their deposits. The failure of one bank often had a domino effect in which customers of other banks rushed to withdraw funds from their own banks, even if those banks were not in danger of failing. Banks needed a source of emergency reserves to prevent the panics and resulting runs from driving them out of business. What led to the creation of the Federal Reserve? A particularly severe panic in 1907 resulted in bank runs that wreaked havoc on the fragile banking system and ultimately led Congress in 1913 to write the Federal Reserve Act. The Federal Reserve System was initially created to address these banking panics. It is now charged with several broader responsibilities, including fostering a sound banking system and a healthy economy. If there was one paragraph that absolutely sounded like complete BS, that's it. Because I only have one question. Which part of this paragraph has actually happened? Right? The panics occurred, but the Federal Reserve stopped nothing. They are the creator of the problems because you have the shadow banking system that they allow, that they promote for the benefit of literally substituting taxpayer money, putting it in their pockets, and destroying the economy and the economic engine of mom and pop. And that is exactly what they've done.
And where does this say that it's okay for them to do the quantitative easing, the purchasing of mortgage-backed securities? I mean,
it doesn't. But you're making my case.
So, I mean, it's just when I step back and I'm like, okay, how do we get in this mess? Maybe it's not the lack of regulation of these, regional. It just all seems to come. It comes back down to the Fed every single time, Mitch. Do you think that that the issues, the collapse of shadow banking or the birth that we see going on right now, do you think that collapse in shadow banking could lead, the entire system to collapse, the entire banking system to collapse?
Nobody knows where that tipping point is. Could it come from a large shadow bank, Sohn Bank in Japan, something of that caliber? Sure, absolutely. But that's what they are. Some of these big banks that you think are banks are nothing more than shadow banks. They're not really banks. Right? They don't adhere to U.S. law. The entities that are here on our soil don't adhere to the same regulations as the big banks do. This is as opaque can be, but it is clearly designed to transfer wealth from mom and pop. And that issue keeps occurring at every level. And that's why I keep saying these are derivatives, right? So all these derivatives are designed to manipulate human behavior. And it all comes back to the destruction of mom and pop, which is the economic engine. You destroy that engine, and this is game over. I mean, this is a depression greater than the Great Depression. And that is why we're sounding the alarm. And that's why we're doing all these videos, because we now have the evidence of where all this emanates from. A, you've got the Federal Reserve on one side. B, you got the state comptroller on another side, creating another layer of fraud. C, you got the issue with the CADs straight across the United States and Canada. So when they avoid USPAP, every single one of these layers is nothing more than another mechanism to steal money.
Mitch, as just a normal citizen American consumer, I'm sitting back, I'm asking myself, with all these problems that these shadow bankings and these middlemen and these greed, corruption, fraud, all of this stuff, the fact that my children are bankrupt, I'm taxed, I should be thriving, I should have 2-3 times my wealth right now. I ask myself, why do we need banks to pay bills? What do normal consumers, let me ask you this, Mitch, if someone that's in credit card debt, they don't have any savings, which is most people, 70%, depending on the data source, 70% of people are living paycheck to paycheck. Explain to me why those people need banks.
Well, in reality, given the technology now of the Bitcoin type enterprises, and we have studied the math, the actual hardcore math on Bitcoin. At some point when people can go peer to peer, the banks will get destroyed. You'll have real banks, but the vast majority of them will simply cease to exist because peer to peer is the key. Can peer-to-peer happen today if the government got behind it? Absolutely. But they don't, because think of the amount of money behind the scenes that literally is pushing back on everything that we're talking about here. Oh, no, we like the system as it is. Well, of course, because you're stealing money. A, or B, you're too stupid to figure out what your real requirements are as far as the society is concerned, as far as the laws are concerned. They're simply going to say, well, we don't have to adhere to the laws of the banking system. Yeah, they're right.
Loophole. Let me ask you this last question, okay? Just a best guesstimate. Are we going to have a new currency within the next decade?
Well, I think it's going to be quicker than that, because what China, Russia are working on right now is, and they are right. I mean, we studied it. I've looked at it in great detail. There's no doubt that they're right. So what they're going to do is they're going to create a currency that is backed by a unit of gold, not by gold, but by the unit of gold. And they will more than likely peg that unit of gold to the equivalent of the value of gold on a US dollar. So it's a pretty slick way to go. And that would help get a lot of these foreign governments off the US dollar, because the US government has been misbehaving. When they say we're going to seize the assets of Russia and hand it to another country, yeah, not very smart. So the US government, you're damned if you do and damned if you don't. But the bottom line is, again, you cannot steal, even though you disagree with Russia, even though you disagree with China, whatever it is, you can't steal other people's money. And this issue here on all these videos is to make mom and pop understand this is what is happening around you. This touches every single real estate owner in both countries, Canada and the United States. This fraud is being committed upon you. And the only way to fix it is everybody stands up en masse and simply says, this is over. We're not participating in your game anymore. There is a solution, there is a fix, and it can be done legitimately. But when you have, morons in power that literally haven't got a clue what their own legislation is, they have to go. Voting matters. You can't tolerate this anymore, because the longer you put up with it, the faster you're going to go bankrupt. And anybody that says, well, I live in a $300,000 home, or I live in a $1.5 million home. If you think the 30,000 houses going on the market at the same time isn't going to affect you, you're delusional. It will affect everybody. That's why you've got so many restaurants cratering by the thousands. They can't make it. If they crater, look at how many millions of jobs that touches. You think that's not going to touch you if you're in your $1.5 million home? Like hell it's not.
May touch you first, to be honest with you.
Yeah.
Mitch, I think you did an excellent job. Thanks for, teaming up with me in this evening. I'll get to editing right away, but I just wanted to conclude with this to the viewers. Another part of the solution, to stopping it is stop spending your money. Right? Stop funding the system. Save your money, you guys. Rebudget, hunker down, work on your purchasing power, become aware of these issues, and join the fight. So, one step is to sign the petition. Take the 10, 15 seconds in the description and sign the petition. And if you're wondering like how to fight value and all this stuff and all the body work that Mitch has been working on for the last 5, 6, 7 years, it's in the description. Just click the link. Now, other than that, guys, I really appreciate your time. Happy Sunday. Hopefully, we'll be back tomorrow morning with something. Mitch, you want to say anything before I let the viewers go?
No, remember, everybody's got a family, and enjoy what's going on around you. These are big problems, and these do have solutions, but it's going to take everybody to get on board.
Well said, sir. And you guys, if you're out there investing in real estate, we wish you luck, and we hope you win.